Alright, what's going on, people? Today we're going over my gold strat. It is very, very simple once you know what you're looking at, so let's hop right into it. So the very first thing that I'm going to look for each and every single day, I'm going to go to my high time frames. We're going to go through a 1, 2, 3, and 4 hour time frame. As you can see, I have the 6 hour, but I rarely use it. Nonetheless, you're going to go through your high time frames and you're going to look for nice, strong engulfing candles. So for our example today, we'll use our price action from last week. So if we look, we have a nice 2 hour engulfing candle right here, right? Very nice, strong displacement leg was put up through. So once we have our high time frame liquidity, all we're looking for is a retest of that engulfing zone and then a low time frame order block. All an order block is very simple. An order block is a low time frame engulfing inside that high time frame liquidity. So exactly like I said, we're going to find, if I can find it, we're going to look at this 2 hour engulfing zone. So from here, we drop down to our 15-minute. I prefer to use 15-minute for my engulfings. Usually they get very well respected nonetheless. So we put in our 2 hour engulfing here, and then we ran up, and then here we come to retest. Now we'll get into the sell side here in a second because there's a way to ping pong stuff like this, but we'll just continue with this play. So we put our 2 hour engulfing, right? And then we came down to retest it. As you can see, once we tapped into this high time frame zone of liquidity, once we retested that engulfing, what do we get? We got a 15-minute bullish engulfing. That is going to be our order block. So now we have our setup, and it's going to be as simple as this. You're going to retrace into this engulfing zone, right? So my entry would have been just like this. And then your SL is going to go at the bottom of those engulfing candles, whichever has the longest wick. Now on trades where you're trading off a sweep, sometimes you might have a really big wick down here, like a 150 point wick. At that point, I would just go with the shorter wick. But anything from 30 to 60 points is a extremely reasonable risk. So there's your entry, right? It's going to be that retrace back into that order block. SL goes at the bottom of the engulfing. And then from here, you can target multiple things, right? If you want to go to a higher time frame and find your target, right? So if you're trading not just daily, but you're trading days on end, this is what it will look like. You would want to targeted this bearish engulfing right here. So as you can see, we had a bearish 4 hour engulfing put in July. So that's essentially what you would have targeted. But if you were trading more on just the daily sense, then it would have looked more like this. You would have entered down here, and then you would have targeted just these highs, right? Which is 284 points, would have kissed. And at the very, very max, you would have only been 24 points in drawdown, which on the lowest risk on gold would only been $240. If you are not willing to risk $500, or if you're trading on a live account, $50, uh, do not be live trading. That's all I got to say. Go back to demo and work on that, because if you're not willing to risk little amounts of money like this, you will never be successful. But let's go back over it one more time, and then we'll go into the next example. So on our 2 hour, we have a bullish engulfing put in right here. And then on my engulfings, when I mark them out, I don't mark wicks. I only mark the candle body. That is it. I do not mark wicks. So from there, you're just looking for a retest of that zone and a low time frame engulfing. So we go back down to our 15-minute, slide on over. As you can see, we got our retest, and then directly after retesting that zone, we got a nice bullish 15-minute engulfing, and as I explained before, SL goes at the bottom of that engulfing, and your TP can go in various places depending on the type of trader you are, how long you're looking to trade, whatever it may be. For instance, this trade would have took place, looks like 8 a.m. on a Wednesday, and you would have been finished out what is that? I'm so bad at this. 8 p.m. 10 p.m. Yeah, 10 p.m. that same day. So you would have had to have held it through close. If you would have just held it to close, it looks like you would have maxed out at about 150 points. Nonetheless, you can see how well it gets respected if you know what you're looking at. Only risking 50 points, never saw more than half of that in drawdown, right? Very, very good. So, like I explained earlier, there's a way to use this shit to ping pong. So, if we go back to our 2 hour, right? Where are we at? Right here. If we go back to our 2 hour, we see this big displacement leg and we see this imbalance of just pure bullish price action. So we already know that we want this zone retested to buy up more. So if you wanted to, you could look for a signal that we're going to go retest. And it's this simple. As you can see, we have a bearish 1 hour engulfing. So once again, I'm going to only mark the candle body, not mark the wicks, right? Mark that zone, and it's the same thing that we just went over. We're looking for a retest, and then it's as simple as SL goes at the top of that engulfing. So you would have risked about 55 points, and then your TP would have been at the top of that 2 hour engulfing zone where we wanted to see a retest. So just like this, right? You risk 55 points, cashed out on 263 points. And then if you wanted to ping pong it, you go down to a lower time frame. And now that we have reached our target zone, you look for that bullish engulfing, and boom, you just ping ponged using the same strat for both trades. Extremely textbook, right? Would have entered off the retest, exactly like how I marked it before, SL bottom. And then if you just retarget those highs, boom, within 2 days, you just made over 500 points. And all you did was the same thing. You looked for a zone of high time frame liquidity, whether that be our 1 hour bearish engulfing or that 2 hour bullish engulfing. You look for a retrace back into that zone of liquidity. That's when you enter. SL goes at the top or the bottom of the engulfing, depending on what you're targeting, and your TP goes at another zone of high time frame liquidity. Now, for gold, 4 hour really be that kisser, but obviously the 2 hour is directly correlated with the 4 hour. We get two closes every four, simple math. So 2 hour also presents really nice entries as well. But like I said, just here, right, just last week, you would have stained 500 points and you would have never, like this trade, you would have only been about $130 in drawdown. This one you would have only been about 220. So at the very max, you would have risked less than $400 to make over 5 grand. And if you can't do that, I don't really know what to tell you, if I'm being honest with you. And this also works for jumping in mid-trend. Now, I primarily target reversals. I'm not a crazy mid-trend trader. You can see that I did do it last night. But I mainly target big reversals because that's when the nicest plays present themselves. But if you wanted to jump mid-trend, you could do it. The fuck is that? You could do it just like this, right? So we have our 1 hour or our 2 hour engulfing right here. Once again, you would have looked for a retrace down into that zone. And since this is such a small engulfing, you don't even really need to look for anything on the lower time frames. SL goes at the bottom of that engulfing, risking 43 points. And then your TP could have been set really anywhere. You could have left a loose TP and just let it run. You could have targeted this fair value gap right here where we don't have a top wick on this 2 hour candle, so it would have looked like this. And you would have cashed out 300 points in 2, 4, 6, 8 hours, right? So this trend, you're going to be holding your trades a bit longer than likely what you're used to, but you're dealing with such minimal risk that that should never be a problem. Like once again on this trade, you would have never risked more than $200. And if you can't do that, then you have a genuine problem that you need to fix before getting on these charts. But it is that simple, right? It is two things. You are looking for high time frame liquidity, and then you're looking for a retrace into that zone of liquidity, and depending how big of an engulfing range you have, you either knock down to lower time frames or you just take it flat out on the higher time frame. It's all dependent on how much you want to risk, what you're confident on, whether you're trading live, funded, whatever. But the strategy is very simple. High time frame liquidity, retrace into that zone of liquidity, and then take off. And I can show you, I don't even know how many examples of this working. This is legit the only strat that I use on gold. Obviously, I dropped that 8 a.m. strat for you guys, but I don't really use it. Like, that was just something I came across, back tested, it happened to work. I wanted to share with y'all. That's that. We can also do this as an example. So high time frame liquidity isn't just engulfing candles, right? Let's get all this shit off my screen. So high time frame liquidity can be various things. It can be an inversion of an engulfing like this. So we have a very big bearish engulfing candle, but then we put a nice displacement leg through it and never retested that zone. As you can see, right before close today, we came down, retested that zone, drew liquidity, and made another move up. So that's another example of high time frame liquidity. Another valid one would be first presented fair value gaps, something like this. Now, the only fair value gap that I will trade is the first presented. I do not trade. I don't trade any other ones, and all of the first presented is what it sounds like. It's going to be the very first fair value gap that gets put in on a new trend. So here we bearish, we flip bullish, put this fair value gap in, come down, retest it, engulf, big displacement leg, we flip back bearish, test this fair value gap, and then make another move up. So as you can see, that high time frame liquidity can come in various different stages, right? It's just about having market experience and knowing what the market likes to react off of. So for this, right, for this inversion, if you wanted to, you could have hit one of these. SL would have went at the bottom of this engulfed candle. Now you're going to risk a bit more because we're trading off our 4-hour time frame. Please get the fuck off my screen. Right? You're going to have to risk more because this is 4-hour. But just like this, right? So if you wanted to target here where this imbalance is, 200 points, you would have risked 91. Yeah, you would have came close, but you wouldn't have hit SL, right? And that's what matters. Could have targeted there, could have left it run, you know? You would have maxed out at 350 points. But like I said, it comes in various different appearances, right? It's not just bullish engulfings or bearish engulfings, but that's my bread and butter. You know, when we have a 2, 3, 4-hour engulfing candle, we have a kisser loading up, unless we're just an OD chop. And then in that instance, you'll be able to stain 70, 80 points, but then it's going to reverse and go right to your SL. And it's just going to keep bouncing up and down. But that is as simple as it gets. High time frame liquidity, first presented fair value gaps, inversions, bearish or bullish engulfings, anything of that nature. EMAs also act as high time frame liquidity, but they're not all the time super well respected. So like for this example, right, you can see we came down, tapped EMA, drew liquidity, then we engulfed, right? And we're not going to trade that EMA. We're going to trade that retrace into that engulfing candle. And once again, like I said, right, SL, bottom of that. Obviously, nobody in their right mind is going to risk 200 points. But your TP would have been up here with these highs. See, you know, risk 200 points to make 940. And I almost can guarantee if we hop down to a low time frame. Let's see if I can find it. Where you at? Let's see. Okay. So we don't have a 15-minute one. Let's hop to our 10. course, you're gonna slide me all the way over because you're a bitch. We actually might have not gotten one for this retest. 5 minute. Let's see. And this is where flipping through all your time frames and making sure that they correlate with each other becomes very important, because you may, it's not even gonna load on the 5 minute type shit. You may not get what you want on 5 minute, 10 minute, but you may get it on the 15 or the 30. Just like this. Prime fucking example. So as you saw, we didn't have a bullish engulfing on the 5 minute, the 10 minute, or the 15 minute, but we do have one on that 30 minute inside that 4 hour zone. And this is how you de-risk, right? So instead of risking that flat 200 points when trading on the 4 hour, you're only going to be risking now a smooth 46 points, right? So you de-risk out the ass. So now you're not as liable, but the trade is still the same. Even though you went down in time frame, your target is still going to be the same thing, which, like I had marked out, was these highs, right? And as you can see, if this was something that you held for probably a week, let's see, Tuesday, and this cashed out. Is that the same week? 10th? Damn, 2 days? Gold was jumping this week. Must have been tariff shit. Nonetheless, like I said, so if we go back to our 4 hour, right? We came down, tapped EMA, bullish engulf. Now we're looking for a retrace into this zone. We're looking for a low time frame engulfing, and then it's as simple as knocking down your time frame, finding that engulfing, being patient, right? Not forcing shots. If you feel like, how do I word this? If you genuinely don't believe it, like you feel like, this can't be right, like this don't seem right, it's probably not right. Trust your fucking gut. Nonetheless, you hop down to a lower time frame. Here and behold, we have a 30-minute bullish engulfing SL bottom. Would have almost hit again, but you didn't. Only risking 46 points, and you could have cashed for 1,000 points for a 22-1 RR. Do you understand how fucking lethal this strat is? And I legit can go anywhere on this chart and find you an example of this exact strat. Shit is kisser fucking central if you know what you're looking at. But I'm going to leave y'all with that. If you have any questions, PM me. Let me know. Y'all know I'm here to help.